Okay, we'll get started. Thank you for joining today's webinar, Selling More Commercial Solar. My name is Charlie Seltzer. I'm account manager at CivicSolar, and I'll be today's host. I'm joined by Stan Fishbein, managing director of CleanView Capital. And prior to founding CleanView Capital, Mr. Fishbein has held positions in equipment leasing subsidiaries of ABN AMRO Bank, Chrysler Corporation, Citibank, among others, and he has over 35 years of equipment in the leasing industry. Since 2008, Mr. Fishbein has served as a board member of the New York Solar Energy Society, a chapter of America's Solar Energy Society. Mr. Fishbein's popular presentation, Making Solar Affordable, was the catalyst for creating a solar ownership program that uses an operating lease as a means to provide companies with a low-cost path to ownership. And in today's presentation, Stan will go over the CleanView Capital product and how it can help more solar installers sell more commercial jobs. And just a little bit more information about the two companies. CivicSolar is a leading online solar distribution company. Our mission is to be the most responsive and efficient distributor in the industry. Besides equipment procurement, we also offer industry expertise, design, engineering, and financing support. We've been growing quite nicely with the solar industry, and for the last 3 years, we've been on the Inc. 5000 fastest growing company list. And CleanView Capital, as mentioned, has more than 35 years of leasing experience. From this experience, they developed strong partnerships with reliable banks, and they have developed an operating capital lease that's tailored for the light commercial segment that really makes solar going more affordable for businesses. And they also can quickly and accurately generate quotes for solar projects, and they made getting financing a simple, fast, and easy process for businesses. And before diving into the presentation, just want to give a little more color on the commercial sector and why we are so interested in it. And most of you have probably seen this chart. It shows solar's tremendous growth in the US. However, the commercial segment has remained relatively flat over the past couple of years, and growth actually was negative in Q4 of 2015. And however, it's not for a lack of opportunity. Some have it estimated as a $67 billion industry in the Northeast alone. And the commercial sector is quite fragmented. Unlike the residential space, the top 10 commercial developers have only about 40% market share, whereas in the residential space, the top 5 have over 50%. This makes the commercial sector a little more attractive for the regional and independent installer, because the national installers, there's not the competition from the national installers, and there's who have much stronger brand recognition and also are well capitalized. Oh, got ahead of myself. Just a few more, just a real quick couple challenges that makes this industry tough. One is access to financing, which we're all aware of. Due diligence is quite a lengthy process, and also financing costs can be prohibitively high for light commercial projects. Another challenge is businesses tend to lease properties, and the lessor may not be interested in making a long-term investment in a solar project or signing a 20-year PPA. And if they are, it raises the question of who gets the benefits from the tax incentive and the tax write-off, and also who pays for the electricity bill. Another challenge is many businesses in the US don't have enough tax liability to take advantage of the ITC, or the way that they're set up and structured, they're not able to take advantage of the accelerated depreciation. And not being able to take advantage of the tax incentives, it makes a solar project more expensive. And finally, customer acquisition is quite challenging in the commercial space. It takes a long time, and it can be quite expensive to find the right customer and then to sell them on the benefits of solar. So maintaining a healthy pipeline of solar projects is quite challenging for commercial installers. And now there isn't really a silver bullet for all of these for the commercial sector, but CleanView Capital's product definitely addresses the challenges and makes going solar not only more affordable for businesses, but also makes it a simple and easy process for both the installer and the business. And with that, I would like to turn it over to Stan to explain more about CleanView Capital.
Hello, everyone. Thank you very much, Charlie, for that introduction. And let me first preface my comments by saying I believe that the reason there has been not greater penetration in the commercial market is because the industry hasn't been using the right products for that marketplace. In other words, residential took off because the PPA and its first cousin, the 20-year solar industry lease, they're both based off the same economic model. That's why they're cousins. Works well in that marketplace. It appeals to the residential homeowners who are looking for no cash down, always positive cash flow. In other words, something for nothing. And in return, these solar lease providers have figured out how to use these programs to make themselves more profitable rather than share greater value with customers. So it doesn't fit in the commercial marketplace where you have a savvy business owner who's looking for more than just a cost reduction program. They don't want the sizzle, they want the steak. And that's what I've tried to provide them by using a traditional operating lease as a financing vehicle, as a low-cost path to ownership, which is really the objective of these business owners because they recognize through ownership is how they achieve greater overall value from solar than going into one of these long-term power purchase agreements. And so once people start using the right tool for that marketplace, I think you'll see much greater presentation. But there's a little bit of confusion and some negativity towards a lease. So let's first start out by saying, what is a lease? It's just a usage agreement, and most people understand that. Like leasing a car, you use the equipment for a period of time, you pay for it during that term, and at the end, you return it. It's a true lease, in other words, a usage agreement. You're not borrowing money, and these are typically triple net. So when you're in possession of the equipment, solar, car, whatever, you maintain it, you insure it, you pay the property taxes. But what's interesting is in the commercial world, and I've been doing this for 35 years, leasing can be used as an alternative method of financing the acquisition and ownership of equipment by a business. Being a tax attorney, I guess it comes second nature to me to structure and put these programs together. But at the end of the day, what we're really doing here with our operating lease for solar is using it as a method of financing. And it's a low-cost path to ownership because of the nature of it being a lease. The monthly payments are 100% tax deductible. So it's a low-cost path to a reduced purchase price at the end of the term, much lower than what it would be initially, and that is part of making the project affordable for a commercial business that wants to own a system. And when I say traditional, I refer to our lease as a traditional lease to distinguish it from the solar industry offerings that are 15, 20 years in length, that are 25, 30-page documents, that are very complex, PPAs that customers and their accountants are looking at for the first time. The traditional lease, ours, is a 3-page document with standard provisions that are commercially reasonable. More than 80% of the companies in the US lease some sort of equipment. That's a statistic that I see year in, year out that's published by the Equipment Leasing Association. What that means is when we go in with a traditional lease, the whole process is going to go quick and easier because we're using a document that's going to be familiar to these business customers and to their accountants and attorneys. And speed and efficiency, it's all part of what we're offering here. So the big benefit for solar is the investment tax credit, that 30% ITC. And a lot of projects are not taken when the customer cannot monetize or share in that value in any way. And so you have a lot of companies these days who are very profitable, but they don't pay taxes. If they don't owe taxes, they can't use a tax credit. And I'm referring specifically to certain pass-through entities like LLCs and S corporations, partnerships. They can't use a tax credit. The tax credits pass through and used by the individual owners on their personal tax returns. Sometimes these folks can use it. Oftentimes they cannot because their accountants, if they have a good accountant, has helped them lower their tax liability. Or if it's several owners, maybe some can use their portion of the ITC, others cannot. And even if they could use it on their personal tax returns, guess what? It doesn't conserve cash where needed within the business for working capital and other purposes. So our true lease solves this problem for customers because the true operating lease allows us as first owner of the equipment to monetize the ITC, and then we share a substantial portion of that value with the customer, and the way we do that is by subsidizing their monthly payment on the lease. So the monthly payment they're looking at is about half of what it would be on a comparable 7-year loan. And by the way, we can offer a loan as well as a lease, depending what the customer's objectives are, and I oftentimes get involved in talking to customers and their accountants to see what their tax situation is and help them determine which program best fits their needs. So the traditional operating lease, it maximizes value for the lessee. There's no upfront equipment cost. The payments are 100% tax deductible. There's no escalation. The payments are subsidized, as I said, by us sharing the value of the tax benefits that we receive. And the lessee, very important point, retains a lot of tax benefits of their own, which we'll see in a minute in a slide that I'll show you. And they also retain all of the energy savings every month during the lease term and after, unlike some of these solar industry leases where a slice of that displaced cost of electric is going to the solar lessor. Also with our lease, the lessee, who's the customer, keeps all rebates and incentive payments. We don't participate in SREX or PBI or feed-in tariff. Those are all for the customers. And finally, ownership is affordable after the lease term when they have the option to buy the equipment and take ownership at a substantially reduced price from what it was initially. So here's an important example, a $200,000 solar project comparing a loan to an operating lease. And I like to show this slide because it displaces the notion that the customer is giving up a lot of value that they would otherwise have when they go into an operating lease. So on the loan column, 5.89% is our current interest rate on a 7-year loan. We can document it as a capital lease with a dollar purchase at the end or a loan document. And we compare it to the operating lease where the customer is not paying any interest. Heck, they're not even paying back full principal, as you'll see. So the monthly payment on the loan, $28.97, 84 of those payments over 7 years is $243,000. The customer is only entitled to deduct the interest portion of the monthly payment, which saves $15,000, assuming they're 35% tax bracket for the moment, which means they have a net lease cost of $228,000. This assumes they can use the ITC, which saves $60,000 in taxes. Now, of course, if they can't use that ITC, it skews the numbers strongly in favor of the operating lease. But for the moment, let's assume they can use the ITC. So their cost to own the system is $168,176. And because they take maker's depreciation, saves another $59,000. So their net after-tax cost of owning the solar system after 7 years is $108,676. Now, compare that to the column on the right with the operating lease, where the payments are much lower at $1,630 a month. So $136,920 being paid in over the first 7 years. You can see right off the bat that conserves cash in the company where needed. And because those monthly payments are 100% tax deductible, it saves $47,922 in taxes. So the net lease cost is only $88,898. Now, we didn't forget about the purchase at the end, which is going to be $30,000 for this project. So the customer's cost to own is $118,998, and customers are allowed to depreciate used as well as new equipment. A lot of solar folks don't realize that. They get confused because ITC is only available on new equipment purchase, the new solar equipment purchase. But every company can depreciate, in other words, write off their investment in used equipment as well as new. So on the operating lease, guess what? The net after-tax cost is $108,498, just a few $100s different and lower than if they were to buy the equipment with a loan and were able to monetize the full ITC. So this dispels the notion that the customer is giving up a lot of value when they go into an operating lease and allow a leasing company to monetize the ITC. That is absolutely not the case, and that's why I like to show this slide. It's all about matching up the tax benefits with the party who's able to obtain them, and this transaction with the operating lease still leaves a lot of tax benefit to be obtained by the customer. So just to simplify or summarize, our traditional lease is somewhat of a hybrid because we have a fixed price early buyout option at the end of the 6th year. In other words, 72 monthly payments of $1,630 plus the fixed price early buyout is $169,000, compares favorably to the 84 payments plus the 30% residual, which adds up to $166,000. Now, what makes this as a hybrid is if you will look at it on a 72-month basis, it's fixed payments and a fixed purchase price, just like a capital lease, but doing it over an 84-month period, which is actually the term of our lease, with a purchase option at that point that says the customer has the right to buy the system at the greater of 15% of lease amount or the system's then fair market value, satisfies tax rules. There's a true lease, which allows us to monetize the ITC so we can share a substantial portion of that value with the customer. And that's what distinguishes our solar lease from any other solar lease you've seen in the marketplace. And in our materials, our program guide, we make the statement in writing that basically we'll give a letter to the customer in the 6th year agreeing that they can purchase the system for that 15% at the end of the 7th year. And if for some crazy reason we did not give them that letter, because our intent is not to try to make more money on the back end by charging a crazy fair market value and demanding pay up and return the system. That's not our game. But by providing the letter to them in the 6th year, and if we don't give that to them, they can exercise the early buyout option, precludes their being taken advantage of by an unscrupulous lessor. So rather than just say, trust us, we're good guys, that's not our game. We've come up with this structure to protect the customer's best interest and get them comfortable with this fair market value true lease feature. That's important for people to understand. It's described in Path to Ownership in our materials. In addition to making solar affordable and creating greater value for the customer than in a cost reduction program, our program includes lease and loan to own. It's a strategy where that $1,630 per month could be used to repay a follow-on loan after the lease and keep the investment in the system an affordable monthly payment within budget. On the front end, we have a technique to eliminate construction period financing costs. When the customer elects to start the lease before completion of installation, we do not charge interest. Why would a customer want to pay monthly payments on a lease when the system isn't installed and generating electric savings or SREC income? 3 reasons. 1, it eliminates real cost, this interest during the construction period. 2, it's still only 84 monthly payments, so the sooner they start making the payments, the sooner they're finished and obtain ownership of the equipment, which is the goal of these business customers. And the 3rd reason is because those payments are 100% tax deductible if they make a few extra payments in the current year. So in the current year, they'll have a little bit greater tax savings. So for those 3 reasons, we call it the ownership program, attractive lease, follow-on lease and loan strategy, eliminating upfront construction period interest, all part of making solar affordable and providing greater value to customers than some of these other alternatives. This, again, just compares lease to the loan, where we have no compensating balances or restrictive financial covenants or other things that banks do when they provide a loan. All that will make our product more acceptable and conserves cash for the customer. Again, comparing it to the PPA or the solar industry's 20-year lease, we have no escalation. All the incentive payments are for the customer, all the electric savings for the customer. We don't take a mortgage on the real estate. We're collateralized solely by the solar system. Simple, familiar documentation to business people. It's a quick, low-cost path to ownership, which is the objective of these business owners. They are accustomed to making investments in equipment and financing these purchases. And so this is something that's not new to them. It's familiar. It's going to help the whole sales process, your sales process, go quicker and easier when you're presenting them with a familiar financing tool, which leasing as a sales tool is what it's meant to be. So that's my presentation today, and we're available for the next 5 to 10 minutes to take any questions.
Thank you, Stan. We do have a few questions that have come in. Are you able to see them?
I do. Yes.
So the questions are surrounding your product with nonprofits. Can you speak to that?
Yes, I can. Unfortunately, tax law precludes a lessor from monetizing the ITC when the lessee is a tax-exempt entity, which these nonprofits are. So we, for that reason, cannot offer these operating lease to non-for-profits. Next question would be, would this offering be available to a nonprofit and not-for-profit customer in Florida? Again, we can't do not-for-profits, but we can lease to for-profit entities in Florida. As a matter of fact, we can offer this product in all 50 states with the exception of South Carolina, which has this draconian filing and reporting requirement, and Washington, D.C. We do not go outside the country to territories, but we can do Hawaii and Alaska. In the loan versus lease exhibit, why does the lease have 0 charge? Is there no lease multiplier or cost of money? The monetized value of our tax benefits are being used not only to subsidize the customer's payments, but also to pay for the interest charge on the cost of money. So the customer is not paying interest for that reason. If you add up their total payments, they're not even paying back the $200,000 project cost. Next question, is this also available for solar and storage projects? The answer is yes. Again, there's some limitations due to current tax law around ability of any party, whether it's straight cash purchase or a leasing arrangement. There are tax rules around how much ITC can be claimed on the storage portion of the project, which unfortunately we don't have a lot of time to go into in today's presentation, but I'm very happy to talk to you, Suvir, offline if you want to give me a call.
Stan, another question is, this is a new concept for solar companies and our customers. Are you able to provide us tools to explain this concept when we are selling it?
Yes, very good question. We have very comprehensive materials that are available to anyone who would like them. On a single PDF, we have 6 customer handouts, a program guide that not only goes into the structure and the discussion on tax and accounting, but also a section with credit application, submission and approval process and turnaround times. It's a very comprehensive piece. There's another handout with 6 qualification questions. If you ask those 6 questions, you'll know whether, depending on the customer's answers, whether or not it's a transaction you should bring to us. Credit requirements is another handout. Credit package checklist is a third, and an application for submission along with their credit package. So there are about 6 handouts. Oh, there's another one called Making Ownership Affordable, which gives you the business language to use when talking to a business owner, and basically telling you how to present this program, and don't get in the trap of starting down the road of getting the customer excited about a cost reduction program, because their expectation level may not be fulfilled. The reason being that if the electric rate is low, say 10 cents a kilowatt hour or lower, then you can expect the monthly payments to be greater than the electric savings during the 7-year lease. If they're looking for a cost reduction program, that could be problematic. But when you're looking at the net present value of an investment over the 25-year life of the solar system, the fact that they're negative cash flow during the first 7 years should not matter. To a company who's prepared to make an investment in ownership after the 7th year, if they have a relatively small amount invested along the way, which is how we show our cash flows, and we show that cumulative cash position every year as a percentage invested, as an amount invested as a percentage of project cost. So again, it's all in the presentation and creating the right expectation level that you can then fulfill with this product that will satisfy their needs, and that's making ownership affordable. It's in our customer handouts. And by the way, you can also go to our website, and some of these handouts, such as that one, can be downloaded from CleanViewCapital.com.
Stan, let's take one more question, and we do have still a number of questions left, but we will address them after the webinar, and we will also send out all the slides to the attendees and everyone that registered. But Stan, real quick, what would you say, what is the minimum size for a lease or a project?
Okay, we like to start at $100,000, and we could go up to 5 million plus. I have to say a lot of what we've done to date has been in the $150,000 to $500,000 range. And most of the companies have been private, but we're getting involved now in doing projects for public companies as well. Sort of interesting there, monetization of ITC is not typically the reason for them doing an operating lease. The public companies have an operating and a capital budget. Capital budgets are always constrained, and with the operating lease program, the vast majority of their payments are going to come out of their operating budget where there's plenty of cash, and the purchase at the end is a relatively small amount compared to the project cost, which can better fit within their CapEx budget. But a lot of what we do is with private companies, companies that typically own their buildings through a related entity, and we like to lease the system to the building owning entity with the guarantee by the subsidy by the related company that's operating within the building, and personal guarantees. That's spelled out in our materials as well. As a general rule, personal guarantees are required whenever there's a private company that's going to be leasing a solar system from us. However, we can make an exception if certain requirements are satisfied, and those are spelled out in our literature and writing for everyone to see as well.
Okay. Great. Well, I think that's all we have for time. Thank you so much, Dan. This was very insightful and helpful for our installers. And we will, again, we'll follow up with the unanswered questions, and also we'll share this presentation to the attendees. And like always, anyone's welcome to reach out to Stan or their CivicSolar account managers. Thank you very much, and we look forward to doing more solar projects in Q4.
Thank you, Charlie, for setting everything up today, you and Mary, and thanks all for being a good audience. You didn't throw any eggs or food at me, so that was a good thing. And I look forward to getting to know you and helping all of you increase your commercial solar sales.
All right. Thank you, Stan.
Thank you, Mary. Have a good day.